What's up, everybody? Sam Arekasima. Hope you're having a great day. Today, I just really wanted to talk about the Consumer Pricing Index, CPI data that came out today for July. So the numbers came in and actually came in at 2.7 versus the expected 2.8%. Now, you may be asking, why does that matter? So that's the rate of inflation year over year. So what we've seen is that inflation is kind of staying around where we thought it would be. And the why that's important is the Federal Reserve is having a meeting next month and they're going to decide whether they're going to cut rates. We were already about a 90% chance of them cutting rates, but with this data, I'm sure that number is going to go up. So the Fed, again, has a dual mandate where they're supposed to be keeping interest rates, not interest rates, they're supposed to be keeping unemployment low, and they have to keep inflation low as well. So with a 2.7, that's close to their mandate of 2%. And what that will allow is now the Fed really has no reason not to cut rates. And you may be wondering, why does that matter? So when the Fed cuts rates and interest rates are lower, it actually boosts the economy. So for example, today, upon that news, the S&P is actually up 1%, around $6,400. Now, if we do get a rate cut in September, you can expect markets to continue to rise. Also, there's a chance that mortgage rates may come down. If mortgage rates come down, now that it makes it more affordable for people to buy homes, and you will see an influx in people trying to buy properties. So if the rates get cut, we may see influx in homes being bought, boosting the economy because now it's cheaper for companies to borrow money. They'll be able to expand, hire employees, and do different things like that. So it's really important to really watch this and see what happens, and you can kind of expect to see what's going to happen with the markets if we do get rate cuts. Now, for some reason, if we don't get rate cuts, you will see the market then take a downturn. Because remember, the market is already priced in all expectations. Anytime we get any news that is different from what the expectation is, the market adjusts either for the upside or the negative side. Since we already have a priced in rate cut of about 0.25% in September, if we don't get that cut, you can expect markets to go down. As an investor, you really want to be looking at all these different things to kind of make your decisions. So for me, if I believe the Fed's going to start cutting rates, I may look to start buying more properties now, because once rates come down, it's going to be more difficult and more competition to buy properties. So I just wanted to give you guys this quick update. I'm going to be trying to give out more information and be more consistent with the content. If you do like this type of content and you stayed this long, please go ahead and subscribe. I'm actually going to be trying to do some more live streams and things like that, property tours, different things that I'm working on, but YouTube actually says that I need 50 subscribers before I can do that. So if you can try to help me get to my 50 subscribers, please subscribe to the video, like the video so it gets out to more people, and then I'll be able to share more content with you guys. Thank you. Hope you have a great day.